Hello viewers, welcome to a new episode of Understanding Patent Valuation. So today we will discuss something super important for businesses, patent valuation. Patent valuation can actually open up a lot of opportunities for businesses, whether it's monetizing intellectual property or securing investments. It plays a massive role in the company's navigate the competitive tech landscapes. So let's discuss with the basics. We have our expert with us. So what exactly is patent valuation and why it is so crucial for businesses?
So, patent valuation is a structured process that helps determine the market value of intangible assets like patents. Simply put, it's a way of putting a price tag on intellectual property. So, this helps patent owners understand how much their patents are worth, which is super important when it comes to licensing, selling, or even attracting the investments.
So patent valuation isn't just about knowing how much your patent is worth. It's about turning that into real opportunities, right?
Yeah, exactly. So patent valuation helps business create income from the patents by identifying their worth in the market. So it also supports decisions around research and development, innovations and strategy. So helping businesses stay competitive in a constantly evolving industry.
Okay. Speaking of businesses, so who benefits from patent valuation the most, and who needs to get this done?
Well, first and foremost, patent owners need patent valuation when they are looking to negotiate licensing deals or partnerships. So it's also crucial when they want to sell or negotiate their patents, monetizing their patents. So, and of course, patent valuation is often needed in patent infringement cases to help prove the financial losses to the patent owners.
That makes sense, especially when someone is fighting for the patent disputes and damage disputes. But what about investors? So how they are, using patent valuation?
So yeah, investors rely on patent valuation to evaluate the potential returns on investments when funding companies or individuals with key innovations. So it also helps them assess whether a company's IP is worth the risk and investment. So without understanding the patent's value or its real value, so that they can't make informed decisions.
So patent valuation helps, guide the investment process. Yeah. So ensuring investors are putting, so much of their money into something with real value. So now, how about licensing executive partners? How they are using patent valuation?
So that's a great question. So licensing executives and partners, they need a patent valuation to determine the appropriate royalty rates when entering intellectual property licensing agreements. So without a solid valuation, it's tough to decide on fair terms for both the parties.
Okay, and we can't forget large companies, SMEs and startups. Yeah, so they had need patent valuation also.
Yeah, absolutely. So whether it's for assessing the value of their patent valuation, justifying the worth of their patents during merger and acquisitions, or securing funding for new innovations, patent valuation is crucial for these businesses to make informed strategic decisions.
So now that we have covered who, so let's get into how. So can you let me know that what are the different methods through which we can perform patent valuation?
Sure. So there are three approaches for calculating the patent valuation. So the first one is the cost approach, and the second is income approach. The third one is the market approach.
Okay, great. So let's start with the cost approach first. So how we can proceed with the cost approach?
So the cost approach is a method where you determine the value of a patent based on how much it would cost to place or recreate it. So in simple words, if you want to develop a patent or a technology, then you would want to know that how much it costs to build that intellectual property. So it's the same thing. So this method takes into account the direct costs like the research and development expenses. So however, it doesn't consider the potential future earnings of the patent. So it's more of a baseline valuation.
So the cost approach, looks into the past expenses, I guess, and not much into the future expenditures and potentials. So what about the income approach?
So the second approach I told you about was is the income approach. So the income approach focuses on the expected future income a patent or technology will generate. So it uses income projections such as relief from royalty rates and the discounted cash flow methods to determine the current market value. So it's a more dynamic approach that takes into account how the patent could generate revenue in the future.
Sounds like the income approach, gives the more broader aspect about, considering future financial potential. So, lastly, let me know about the market approach.
So the third and final approach is the market approach. The market approach involves determining the value of a patent by looking at past transactions of similar patents. For example, if I have developed a medical device and I want to know that how much it could be, at what rate it could be licensed or to be sold to the other owners. So so for that purpose, I will look into the past transactions, like if there any similar transaction has happened in the last few years. So that will be very beneficial for me to understand what is the valuation of the patent. So this approach reflects the real world market perceptions of value, but requires access to relevant historical data.
Got it. So it's about finding comparable patents to understand value of the market in willing to pay.
Yeah.
Okay. Now let's talk about the influence the value of the patent has, and what really drives the patent's economic value.
So there are a number of factors that play into it. So first of all, there's the patent claim strength. The stronger and broader the claims, the more valuable the patent is. So a broad claim gives extensive protection, which makes the patent more enforceable and attractive to investors or licensing partners.
So that means the stronger the claims and more potential the income holds. What else?
So yeah, the patent life is another big factor. Thus, the longer the remaining life of the patent, the more exclusivity it provides. So which increases its value. As the expiration dates near, though, the value tends to decrease.
That makes sense. So what about the market demand? Does that also affect the value?
Absolutely. So if a patent covers a technology that's in high demand, particularly in fast-growing industries like the IT or the 6G technology and the others, so its value goes up. The more competitive and innovative the market, the more valuable the patent would be.
Okay. And finally, what about the enforcement risk? So do they play a role in this?
Yeah, they do. So if a patent has a strong legal standing and isn't likely to face costly litigation, so it becomes more attractive. But if there are risks regarding enforceability, such as uncertainty about whether the patent can be defended in the court, the value could drop significantly.
So a patent's ability, to generate income or its legal strength and its market demand are all key factors that influence the value.
Exactly. So when you combine all these factors, you get a clear picture of a patent's economic value, which helps stakeholders make informed financial decisions about their intellectual property.
Great. And with that, let's wrap up today's episode on patent valuation. It's a complex process, but as we have seen, it's absolutely vital for making market decisions in the world of intellectual property. So, if you enjoyed today's conversation, don't forget to subscribe, rate, and leave a review. Thanks for tuning in, and we will catch up with you in the next episode.